Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Business Today Television. I'm Sakshi, Batra. On this show, I'll also be joined by Bhatnagar, and with us will be two special guests to help us navigate through the last hour of trade in the markets today. Remember, it's a weekday for the markets, panning out to be another day. After a volatile last week, we're going to be seeing again some lackluster trade when we talk about the benchmark index. The Nifty right now is about 185 points lower at 21,525. You're looking at some of the heavyweight sectors also contributing to this fall, like the Nifty Bank, for example. That's the one that is under pain and at this point in time, over to 700 point of a cut coming in on the Nifty Bank at 47,429. That's a 1.5% cut coming in on this major index. And that's clearly one of the top contributors on the markets today. It's the PSU banks that are looking at profits being taken off very, very sharply from the higher levels. 2.5% down for the Nifty PSU banking index today. When we look at some of the other sectors, so private banks are down by 1.5%, metals are down by 1.4%. You also have the financial services down over 1%, and even the broader markets are coming under pressure. So a percent loss for even the mid caps today. So no support coming in for the smaller caps or the mid caps as well. You're looking at all the sectors, barring the realty space right now, that's or they are all down in the red. Among the Nifty 50 top losers, you will see some of the heavyweight counters contributing to this downfall. So you have stocks like, ITC that are down in trade, ICICI Bank that's down in trade, HDFC Bank that's down in trade, Reliance Industries. These are the heavyweight counters that are dragging the Nifty down. UPL, Divis Laboratories, SBI Life, State Bank of India, HUL, Britannia, LTI Mindtree. These are the top 5 losers. On the gaining front, you have Adani Ports as topping the charts in an otherwise weaker sentiment in the markets, 1.3% higher in trade. HCL Technologies bucking the trend in the IT space, 1% up in trade. Power Grid, NTPC, so some of these energy majors are still up. Oil and gas stocks are, especially from the OMC space like BPCL, that's up in trade. You also have ONGC from the oil and gas basket from the upstream majors that are up into the green right now. Bajaj Auto, Bajaj Finance, these are the other two Bajaj counters that are up into the green. Broader markets seeing better action. Capri Global Capital, that's the one that's topping the Nifty 500 charts, 15% higher in trade. Alok Industries about 10% up. Easy Trip Planners 5.5% higher in trade. Shail Bhatnagar also with me. Shail, it looks like it's turning out to be a weak start to this entire week. Pressure at the higher levels continues to be seen.
Absolutely, Sakshi. I think we are now seeing the first signs of a correction that just might cut deeper into the market. Although there is nothing to be worried about. We are at 21,540 on the index. Remember, the all-time high was 21,834. So not much of a panic there, but yes, there is a deep red cut that's sort of moving around within the Lal Street. At this point of time, there are no gainers worthwhile to talk to. And all that you see is some parts of very high beta stocks that have recently joined the rally, which are still up, the likes of Alok Industries, Trident, etc., Sula Wines, but nothing of consequence which one can safely say that money is moving into them. So this is a round of profit booking. We've had a negative first week of 2024, and Monday of the second week has started on the back foot. The gains that we had seen over the last 8-9 weeks, some of them are being taken away by the market. So no point buying the dip till the index settles, especially the Nifty and the Bank Nifty. And once they do, then of course we'll see what is worthwhile. But for the moment, it seems that bulls are resting and bears have an upper hand and control of sentiment on the Lal Street. Sakshi.
Absolutely. Let's also welcome our guest on the show. G Chokkalingam now joins in, founder and MD at Equinomics Research. Good afternoon, Mr. Chokkalingam. Good to have you with us on Business Today Television. First time we're meeting on air in 2024. Happy New Year to you as well. Tell us, what's your own sense as far as the markets are concerned? We're sitting on the 8th day of the new year. So far, it's been pretty volatile. Where do you see the markets are headed?
First of all, thank you, and I wish the entire team a great success. Wish you happy New Year. Coming to the market, this is in line with my expectation. I think today's fall is just a beginning, especially for the small caps. I've been very nervous on small cap for last few months, and you don't have a valuation comfort. Even if you look at the trailing P, it's around 33 for small cap index, as compared to around 25 for Sensex. Even the market cap of small cap stocks gone up almost 4 times in the recent time. If you take a BSE 500 market cap, that you subtract from the overall all listed market cap, it comes to around 35 lakh crore. That is primarily accounted for by small cap segment, which used to be around 9-10 lakh crore for a very long time. So almost 4-fold jump. So either you take valuation or you take a market cap build up. There is tremendous nervousness in the small cap. Individually, there are many small cap stocks are trading at even 50 to 80 PE. So therefore, I am expecting, even some fear coming in the segment and some substantial selling happening. But I am very confident on overall market. Any further fall happens in Sensex Nifty, we can expect a lot of institutional buying coming in. I think 24 is a year for large caps to outperform the small caps.
Fair point. A very warm welcome to you, Mr. Chokkalingam, and greetings to you, to your staff and everybody at home for 2024. Should you be having a shopping list to buy this correction into, what are the 1 or 2 stocks that you would be looking at?
You mean large cap or small cap?
At the moment, whatever catches your fancy, large cap, small cap, immaterial.
Yeah. So definitely, I would suggest. In fact, today also we release a report to our clients, research report. We say that at least 50% to 60% you put it in the large cap, top 100, or to some extent, if you want to compromise, top 250. Then 10% cash and gold ETF, or it can be even up to 15%. The remaining 30-40% you can put it in high quality small caps. One such stock would be Karur Vysya Bank. I believe it has got a great potential. Recently, SBI Mutual Fund and ICICI Prudential Mutual Fund, they have got approval from RBI to hike the stake up to 10%. And its return pay is the lowest. It is comparable to even banks like HDFC Bank. That is one stock I like a lot. And second, East India Hotel. The promoters have around 35% stake. And on the other hand, ITC and Reliance Group together have about 35% stake. I believe that in 2024, hotel sector would do extremely well, thanks to huge traveling by Indians. And East India Hotel should be beneficiary of possible consolidation happening in the hotel sector. I am not forecasting that East India Hotel would be taken over because of that current holding structure of these 3 parties. I believe the stock can be re-rated. Similar logic for Taj GVK Hotel, which is a joint venture of Indian Hotel. And in fact, this hotel is the cheapest hotel stock. This also I like a lot. And another stock would be Geo Financial. I firmly believe that this is a potential multi-bagger in the next 2 to 4 years. So these are some of the stocks we have a buy rating, and we have a very, very high conviction.
And Sakshi, these are all unusual names. Some, of course, we've come across, Geo Financial in particular. But the 3 that Mr. Chokkalingam mentions are providing a lot of comfort. Of course, you've addressed the hotel theme since morning because of the tussle between islands, Lakshadweep and Maldives. So 2 more names also added to our growing list of companies that are either affiliated to the tourism segment or are directly impacted. Of course, in this case, these are direct plays. EIH and of course the Taj Group. And what's really interesting is Karur Vyasa, yes, stock at a record high of about 160, 165, but lot of pent up demand for old private sector banks. Sakshi, what else are you looking at? It's a sea of red.
Absolutely, Shail. A lot of red, but if we look at some of the interesting stocks from the Nifty 500 basket, we'll find some interesting names. I was just talking about Capri Global Capital. It's up 16.5%. Very rare for this stock to actually show up this kind of a move. I'm not taking Alok Industries' name. It's already done and dusted so many times. Easy Trip Planners 5% higher. So along with the hotel stocks, we're also looking at the tourism players move up higher in trade as well. GMR Airports we already discussed in the morning. It's 4% up in trade as well. BLS International Services. I think this company is related to the visa providers, and that's why this theme is also picking up pace as well. How would you look at all of these counters that I mentioned, Mr. Chokkalingam? Anything that interests you apart from the hotel space, the related sectors that are linked to this theme?
Certainly, I looked at some of these stocks. Honestly, I don't have a valuation comfort. Yes, BLS International has been doing very well. It's almost near monopoly in the kind of unique business it does. But again, I find it difficult to justify on the basis of valuation. So I would still suggest 7 out of 10 stocks should be in large cap, and better use this opportunity to restructure somebody's portfolio by getting rid of overvalued stock and buy large cap. And of course, I still maintain that 30-40% of your investment should be in small and mid cap, but without compromising on the quality of management, quality of the balance sheet, and valuation comfort. So therefore, these stocks names you have mentioned, I am not able to find a lot of comfort in any of these parameters.
Okay. The earnings season is also kick-starting, so I want to draw your attention to the large cap space as well. The big IT firms will be reporting their earnings starting 11th of Jan. How are you looking at those names, TCS, Infosys, HCL Tech, any of those giving you the comfort to buy in ahead of the earnings?
Of course, more than a couple of years back itself, I said the wealth creation story in large IT stock is over, because I started my career when the India's IT exports were in a few $1 billion. Today, over $120-130 billion. You cannot grow this base in a strong double digit. It is growing only in poor, around 4-5% in dollar term, our export revenues. And that would continue maybe for a few quarters or a few years. So I don't expect the IT stocks to come out with any impressive results. Just because of depreciation of rupee, they may post a double-digit growth in profit. But otherwise, the stress is going to continue. But still, if somebody has exposure to stocks like Infosys and TCS and HL Technology, one can continue to hold because I may be wrong, but I believe there can be nervous selling in small and mid cap in the short term itself before election. If that happens, these are the stocks would be proven to be very defensive. So I would prefer among these three, Infosys as the high conviction large cap IT stock at this juncture.
Sakshi, let's do some bit of market spotting. I'll name a couple of stocks which are doing fantastically well in terms of price and are attracting huge volumes. Remember, this is all market spotting. Sakshi mentioned Capri Global. Let's look at it again, 16% higher. This is 901, 902 in front of you. What's really interesting is that 35 lakh shares have been traded, and this is 50 times the 5-day moving average as far as volume is concerned. There's no doubt in my mind that Capri Global is at a record high. This is a mid-sized lender, NBFC, headquartered out of Mumbai. And would you believe it, somewhere in June of 2021, this counter was in the vicinity of 439, 440. So it's almost doubled in the span of 2 years. Fairly strong move coming in. What else is moving? We've discussed, actually marked two stocks already. Trident, which is 46.75, 14% higher. Again, 13 times volume, which is 37 crores. We won't be taking a stock call on that because these are overheated counters. Then we have GMR Infra, 87.15, 4% higher. This is again 19 crores worth of volume, 4.6 times the average. Easy Trip, these are of course news-led moves that are coming in. This is a website that helps catalyze tourism and hotel bookings, 43.65% higher. Again, the broader theme of the tussle between Indian Twitterati and Maldivian Twitterati benefiting Ease My Trip at the moment. And of course, you have the likes of Suzlon, 5% higher, 9 crore worth of shares traded. Suzlon has come back into activity. Remember, we are marking what is called Chota Packet, Bada Dhamaka, or high beta, low ticket items. This is where the eyeballs are. This is where the price action is. This is where the momentum is. Sakshi.
Absolutely. And to add to that list, I think Crescenda Solutions, another stock that's in news flow, also 7.7% higher in trade. It's announced the completion of acquisition of a 51% stake in Mastermind Advertising Private Limited, and therefore you can see Crescenda Solutions also up by almost 8% in trade right now at about 26, 27 odd rupees. Remember, again, these are very, very high beta counters and small ticket price items that are moving up in trade, only marking the prices right now. Bringing your attention back, Mr. Chokkalingam, to some of the stocks which are moving in trade today. Let me draw your attention to the oil and gas space. How would you look at the OMC basket and the upstream companies at this point in time, sir?
I won't suggest OMC, particularly during election year. It is less likely that OMC will make a lot of money. But certainly, if somebody is holding stock like Oil India, ONGC, they can continue to hold. Oil India, in fact, we have a buy call. And its joint venture is subsidiary is doing very well. NRL refinery, which is expanding the capacity by 3 times. So Oil India could be one good stock, and even ONGC. But otherwise, I would not hold any other oil and gas companies at this juncture.
Okay.
Sakshi, I think one stock that needs to be marked is GMR Infra, and this is again news driven. I'll read out the news. This is as GMR Infra has informed the exchanges. It says very clearly that its step down subsidiary has benefited from an order by the arbitral tribunal regarding the force majeure clause that was put into place between 19th March 2020 to 28th February 2022. The monthly annual fee that DIAL had made to the Airports Authority of India has been excused, and this amount will be refunded with interest. DIAL is also excused from making payment of monthly annual fee from January 2021 to February 2022. We don't know what is the quantum of money that will be refunded, and it says very clearly that the award may be challenged, in which case DIAL, which is the step down subsidiary, will appropriately defend the matter. So that's the reason why you see 88.7 on DIAL as far as prices is concerned. This is a news that has just come on exchanges. Sakshi.
Absolutely. You know, the one sector that I wanted to ask Mr. Chokkalingam about is the realty space. It's a 0.25% up in trade, and it's despite an 80% surge odd or so that we have seen in 2023. Again, another 7% surge in the first week of January. What is really behind this stunning move in the real estate space? Of course, we are listening to all this news flow that they are having some, great pre-sales figures. Of course, some of the luxurious properties by some of these major companies being sold in 1 or 2 days itself. But does that translate into investors' party as well on the street for real estate counters?
There is some fundamental substance for rally in the real estate counters. That is the land prices going up for the last 1 to 2 years. Normally, the equity asset class participates in the boom, and that is followed by the land assets. Which is what exactly happening now. And I am of the view that the land prices would continue to go up. So one can hold on, but the criteria should the investors follow is that prefer the realty stocks which have got no debt or least debt, and realty companies which are sitting on the land bank which they purchased in the recent period of say, last 2 to 4 years. And also, contrary to the traditional analysis, if any realty company is sitting on a huge inventory, that preference can be given because these inventories would be at production cost, which would be much lower than the current market prices. So these are the three criteria one should follow. And if any such stock falls in this, fulfill these criteria, then one should hold on to them.
Okay. Sakshi, let's mark a couple of indices as well, in particular Bank Nifty. Now there is a problem brewing as far as Bank Nifty is concerned. We see a 1.4% dip. You have 47,500 on the screen. And if you remember the morning commentary, this is a level that was mentioned that there is a strong support at 47,700. Now that's broken intraday. And Sakshi, the troubling part is that the index is now below the 20-day exponential moving average. Let us see where it closes. Therefore, 5 has gone, 9 has gone, 10 has gone, and now 20 is at risk. The index is below that. And the level that you see on the index is actually the lowest since 22nd of December. So it's almost a 3-week kind of a low that you see on the Bank Nifty, and our morning commentary actually alluded to the fact that banks are under pressure and the fall is coming on increased open interest. That was what was said, which essentially means that a lot of shorts are being pushed into the system. At this moment, the Nifty Bank and the Nifty PSU Banking Index are two of the biggest losers as far as the Lal Street is concerned, and this needs to be brought to the notice that maybe the shorter term trend on both the PSU as well as the banking index seem to have turned in favor of bears. Sakshi.
Right. Mr. Chokkalingam, what's your thought in the entire all right, I think we don't have Mr. Chokkalingam right here, but let's look at a few stocks then. We do have Bajaj Auto and Motors up into the green, and also Hero Moto as well. So these two-wheeler stocks are definitely doing well in this current market setup as well. And apart from this, Bharti Airtel, we need to keep an eye out on this one. From last week, 10 days odd or so, it's constantly coming up in trade as well at about 1049 odd levels right now. Currently about 0.3% up in trade for this one as well. The lone pharma mover in the green as far as the Nifty index is concerned is Sun Pharma, up by about 0.3% higher at 1304 in trade today as well. Let's also look at some of the other stocks in the broader markets that are doing well. Let's look at Godrej Industries, for example. It's up by 5%. We have Data Patterns, that's moving up 3.3% higher in trade. Angel One, that's the one that's moving up 3% up. Apart from this, we also have Amber Enterprises, again from the real estate bank that's buzzing right now. We have Power Industries that's also moving up in trade, and Nykaa, that's up by 2.2% odd as well. All right, we will try and find out. What we'll do right now is we'll take a very, very quick break right now, and when we return, we'll also be joined by Soni, Patnaik, and we will be discussing more stock ideas with our new guest as well. So stay with us on Business Today TV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. at PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi, Batra, with me, Bhatnagar. Also with us are our special guest, Soni Patnaik, AVP Derivatives Research at JM Financial now joins in. Also with us is Mr. G Chokkalingam, who we have been having the conversation with. Soni, to you, good afternoon and good to have you back with us. Is it increasingly getting a more difficult market to pick out stocks? And if yes, if not, then please do tell us one or two stocks that you may have still picked out for all our viewers.
Right, so good afternoon, Sakshi and Shailendra. Thank you so much for having me on the show. You've rightly pointed out it is getting quite difficult, considering how volatile the markets are. But if you look at the broader picture, it is still in that range of 21,500 to 21,800. And even today, with the correction that we've seen, it has not broken that 21,500 odd levels. There could be a chance that if it breaks 21,500, we can see 21,300 on immediate basis. There can be some more profit booking taking place. But it's just that if it's closing today below 21,500, then there's that possibility. If it's not, then there could be a small bounce back that we may see again tomorrow. So I think it's still intact in that particular consolidation range. It's just advisable to be a little bit cautious at current market level and just wait out for the levels to either break on either side of the range to take a confirmed trend for further future trends.
Okay. A very warm welcome to you, Soni, and once again a happy new year. A lot of high beta sort of correcting very sharply. Metals down substantially. The former darlings of the market, NMDC, National Aluminium, Hindustan Copper, MSTC, all falling substantially between 3.5%, 4%. Of course, this correction will sort of work itself into Dalal Street and then move out. Once it does, would you have a list of high beta, good quality stocks that you prefer? If you could just share a couple of names, stocks that you would like to buy after a 5-7% correction in the mid cap space.
It's Shailendra, I think one would be, of course, to look at the entire metals pack. And since you've pointed out NMDC, although the correction has happened from 225 plus levels, it is still holding quite strongly above 200. Even the options chain for the derivatives data is indicating that 200 is a very strong base. So if it falls anywhere towards that dip of 210 to 205, that becomes a good zone to just accumulate and keep your very tight stop losses intact at 195. There should be a bounce back seen from those levels. I think it's good to see such stocks. And apart from the metal sector, it is also fine to see some more stocks which are not that volatile as of today. So first one would be IRCTC. So IRCTC is consolidating. It has a very strong base of 860 followed by 880. So there are multiple support bases for IRCTC. On any dip, you can definitely accumulate towards 910. You can accumulate in that range. Short-term basis, 900 is a very good support, but if one has to look at a positional view for IRCTC, then 860 is that view. 860 is a level which will hold quite well. It is consolidating, but the moment it's able to cross above 940, you'll see a fresh rally in IRCTC, which will take up to 1,000 levels. I think so. This is another pick that one can definitely be looked at, and buy on dips would be better.
All right.
This is a very sensible stock that Soni has talked about. Remember, in a day when the market is correcting very, very substantially, and the fact that other public sector railway stocks are not doing well, here is IRCTC, which has a lot of strength in it, double-digit gain. And how should I say, the morning prices were a bit higher, 929 I saw intraday. Let's get Mr. Chokkalingam into the discussion. Mr. Chokkalingam, nothing much has happened on IRCTC for 2 years. Is this something which is an outperforming candidate for 2024? मेरे ख्याल I don't think so Mr. Chokkalingam is with us, but okay. we'll reserve that response for some other day. But IRCTC is where Soni puts her stamp of approval. Just a couple of other questions, Soni. Are you interested in wines? And if yes, what's happening on Sula?
I think that's a popular stock which has been discussed widely today. And of course, I am interested in wines. That's a separate debate altogether we can have later. So, looking at the charts, of course, the last 2 days I can see where there's very strong breakout packed with very high volumes. It's not at current levels may not be wise to just enter at current levels. Maybe perhaps a dip if it can be seen around 620 to 600. So that dip is a better range to accumulate, because the breakout that has happened is above 540 and 570. These are very two crucial levels for this stock on a positional basis. So accumulating on dips is a better strategy to go as long as 540 is holding. It will definitely try to rebound back again after that dip you can see and head towards 700 levels.
Okay. Soni, I'm sure that you may not be interested in wines, but every girl is interested in personal care and every girl is interested in fashion and in makeup. And I'm going to ask you the two stocks that you've already guessed by now. Honasa Consumer, that's up by 7.7% today. And that's the parent company of Mama Earth, which makes the personal care products. And Nykaa, that's again up in trade today, 2.2% higher. It gave its business update, I think, yesterday. And after that, it's been in focus. Your own sense of, do you like these two stocks for trading or short to medium term?
Right, so I first had Nykaa on my chart, so I've just switched it to Honasa right now. On charts, if I see weekly basis, then the closing of 445 that had happened last week is the crucial short-term immediate support that one can look ahead. If there's any small dip around 460, that decline should definitely be bought into. 445 can be your short-term trading stop loss, and it'll again bounce back to 500, 520 levels. So I think it's a good stock on charts. There's good volumes. There's a positive RSI divergence as well. And even in today's choppy market, it is holding quite strongly of 6 to 7%. To top it all, it is also above your 10, 20 and 50 EMAs as per the today's charts. So I think this is a good stock to look on charts. And speaking of Nykaa, we're seeing some sort of profit booking happening from higher levels of 182, which is a resistance actually. On 18 December also, it had tested 182, 182, 83 is not crossing. That breakout may not be seen. However, the stock has also witnessed good volumes today, and there is a positive RSI divergence. So I think there is a very strong support around 172. So one can accumulate on in that support of 172, and then it can bounce back again to 180, 183 levels. So that range play is quite nice for Nykaa.
Okay, let's just get Sula Wines again under our radar. This is a nice, clean company backed by a very, very decent research report, and the fact that there is a regulatory change that has happened in Maharashtra, which is home to Sula. So the news, ladies and gentlemen, is that one, there is an upgrade that's coming in from CLSA, and the target for Sula Wines is somewhere in the vicinity of how should I say, just a moment. CLSA has put in a price target of 863 on Sula Wines. It's upgraded it from 571 earlier. And the news is that the government of Maharashtra has announced the revival of the wine industrial promotion scheme for a period of 5 years. And as per this scheme, wineries are charged a VAT of 20%, of which 16 percentage points is refunded as rebate. The state cabinet has also approved the refund for the rebate under this scheme for 4 years starting financial year 2021. Remember that Sula came out with an IPO in December of 2012 at a price of 357 per share, and last 2 days have been really, really fantastic as far as Sula is concerned. 657 for you, up almost 18-19% on huge volumes of somewhere like 1.56 crore. So you can have your wine and enjoy an appreciation in stock price too. Sakshi, for you it doesn't matter. आपके लिए तो रूह अफ़ज़ा चलेगा, right?
The company is also a leader in the wine tourism, you know, also, even if I don't consume wines, but then definitely tourism wise it makes for a great play. And of course for the performance that Sula has already displayed, is it exemplary, because you know, in a country where advertising alcohol products is not allowed, you still are continuing with such high revenues, and you know, the kind of performance is exemplary right there. So okay, so that's as far as Sula Wines is concerned, but let's get some other sectors also going. All right, Soni, my favorite sector these days is cement, which I always ask. You know, I'm again looking at some of the sector stocks that are moving up in trade, like JK Cement is coming back in flavor. And how would you look at the entire basket? Because you know, January to March we always see a lot of activity of construction in the country. Is that some, and of course we'll have the voter account budget that is likely to again talk about at least some infrastructure development projects that the government will be talking about. Is that going to be an interesting space to be in?
It's Sakshi, I think looking at from a very strict data perspective for cement sector, there's some profit booking. It has been performing quite well for the past 3 to 4 months. In that sense, it has been, you know, we can see some profit booking, especially in stocks like Ultratech Cement and Ramco Cements today. However, JK Cement is our outperformer, so that we can just see more space left. So the overall idea for the entire cement basket is a buy on dips. I think that's how the sector can be played out, because you know, it was just like last week we've seen such good rally coming in, especially real estate stocks and infra. So they are all closely tied with each other. You know, so the infra and cement, whenever we look at the data perspective, it's all always connected. So I think cement sector would be a buy on dips sector. I think, you know, not to just entirely let go. So it's better to just accumulate these good stocks such as Ultra Cement and India Cement and JK Cement, which is in momentum today. So it can be all bottom dips.
Sakshi, it's almost 3:10. Let's take a look at volume-based counters that are moving. And NSE 500, there's an unusual number 1. And an even more unusual number 2. I can't remember the time when Kotak Mahindra Bank was the top traded counter on the on the National Stock Exchange. Well, it's so today, 1.1% higher. Remember, this is the biggest loser in the Nifty Bank series for the month of January. Down today again 1%, 1828, and 2,137 crores worth of shares have been traded for Kotak. About 1.16 crore shares have been traded. It's not unusual in terms of volume. It's just that there are many counters which are often traded in multiples of what Kotak's volume is, like HDFC Bank, like ICICI Bank, like Axis SBI. But it's well, Kotak's day, and in a dark format, which is red. The second most interesting counter, Sakshi's Trident Limited. भाव भगवान है जो सामने है, मार्क करना पड़ेगा. 48 rupees, 17% higher. 1,800 crores worth of transactions happening, 40 crore shares, and this is of course 5-7 times the 5-day average. Then is GMR Infra. This is again news driven, 87.20, 4% higher, and about 1,600 crores worth of transactions. Electro Green, remember, this is the first stock that we marked in the morning, record high. Again, the EV bus space coming in, and today this record high is accompanied by a substantial jump in volumes, 1,400 crores worth of transactions. And then comes, you know, Yes Bank, 1,300 crores, HDFC Bank, 1,300 crores, Yes Bank again in the green, 2435, 1.5% higher, 1206. So this is how the top traded volume is concerned. And what is good is that you might see a cut of, you know, something like 200 points on the Nifty. But Sakshi, the good point is this is not accompanied by selling. This is just a nice downtick on the Nifty, unaccompanied by volume. This is a very, very positive, Sakshi.
Absolutely. Let's also look at some of the other pockets now. From the auto basket, I wanted to ask you, Soni, How are you looking at the two-wheeler majors? We just got the FADA update for the month of December in the morning today, where it did mention that the retail sales for the whole sector was at 21%. Especially the two-wheelers have clocked in the highest amount of growth in the month of December, 36% surge coming in for this one. After a long haul, this sector has started to pick up pace. Which stocks would you go with in the two-wheeler pack?
The first pick would be TVS Motors. It has seen good long beta positions today, and also it has crossed the 2000 of resistance. Now it's you can see a lot of call unwinding happening at that 2000 call, which was earlier resistance, and it's a new base that it's trying to form with a positive RSI divergence. So both technical and derivative parameters have combined together to give it a bullish outlook. And from current levels, also it is looking quite strong with 2000 support. So it can definitely test 2100 to 2140 levels positionally in the coming days. I think this would be a best pick from the entire space.
Okay, TVS Motors currently 3% higher in trade at 2037 odd levels as one of the top picks from the two-wheeler basket for Soni. What about the auto ancillary space? Which is the top one or two counters that you can actually mention from this space where you're bullish on? There is a huge consensus building up on, say, a Samvardhana Motherson or maybe an Uno Minda. Do you have some other names to add to the list?
So, Motherson is also good. It has been consolidating, above 100 level range. So 100 has not been broken even in this market choppiness. So I think as long as it's holding, it will try to take out its upper resistance of 108 and 110 odd range. So once it's done that, you can see further move coming in somewhere than Motherson, all the way up to 116, 118 level. So I think this is a good pick from this particular sector. And for a positional play from the entire auto space, I think Tata Motors is still holding quite a strong structure technically as well as derivative options chain. So you can see that 800 is as of now acting as a resistance, but the moment it's able to cross that 800 and close above it once more, you'll see it in a fresh trajectory altogether towards 840, 850 levels. So I think Tata Motors is also quite a good pick from current levels.
Okay. Sakshi, 315, let's mark a couple of stocks. Sula's up 20%, and this is on a volume of 1028 crores. Remember, the 5-day average on Sula is about 300 crores. So it's a 3x rise in volume accompanied by a 20% jump in price thanks to that CLSA report and of course the regulatory changes governing taxes as far as the winery business is concerned in Maharashtra. Okay, Zomato positive and 133.50. Total value traded is 473 crores. Then you have Bandhan Bank. Now this is a pain point. Bandhan Bank is down 7.5% at 232.95, and the problem is that this 7% cut is accompanied by a very sharp surge in volume. 1200 crores worth of transactions are done. This chart is very disconcerting. Soni, your views? It's broken 200 DMA and this is the second day of losses.
Yes, so it has broken all major support, 50 and 200 EMA also it has broken, and with aggressive short built positions. The next support for this stock is actually coming about to be 224 or 223. So I think that's the level from where we had earlier seen a recent surge in this particular stock. So I think as long as it is holding, maybe there can be some bounce back from those dips. But as of now, it's it's better to just avoid the stock and not enter into any sort of aggressive buying or selling, and just wait and watch how the 224 support is being defended, whether it is breaking or it's just getting defended.
Okay, there's no point catching a falling knife, and there's no point catching a falling knife where quality is a little more suspect when it comes to frontline counters. Therefore, should you wish to shop, look at frontline private banks rather than second rung private banks, and let this pain settle down. What else is moving, Sakshi? It's very hard now, but it's India VIX, which is up 7%. and the fantastic derivative traders that Soni is, she will appreciate because this signals not only the return of volatility but also of risk that we have been consistently pointing out in our headlines as also in our commentary, that stop loss is your best friend and you have to be extremely cautious on the long side. Soni.
Yes, absolutely. I think that's a very well advised. And VIX is up, although it is also in a range, from 15 was the higher side that we witnessed in this Jan series. It corrected, it came down all the way to 13.5. So it is here to remain in this range as well. It's just indicating that there could be more volatile days ahead. So I think it's best that one can actually be cautious in markets, especially when Nifty and Bank Nifty are breaking the support levels today and are quite on the way to close below their support levels. So it's better to hedge the positions or keep just like avoid and stay cautious for some time until there is a clear view, and choose for stock specific strategies with quality stock names where buy on dips will work far better.
Right. Okay. So we are inching closer to 320 mark right now, 11 minutes away from the day's close. Any STBT, BTST trades, Soni, that you can pick out for our viewers?
So I think STBT would be a better trade since Nifty is also breaking the level and it's going below. So Mahindra and Mahindra, M&M is a STBT from current levels. We can see it is breaking 50 EMA as of now. So putting a small stop loss of 1630. It's in cash level, one can see. So 1630 can be a stop loss. You can do it in futures also, but then follow the levels as per these cash. The downside target also looks quite intact, so it can fall down to 1580. So I think 1580 to 1570 is a target for M&M. It's a STP.
Okay, M&M as an STBT candidate for you, right there from Soni. The markets are slipping away, 10 minutes away from the close, and the Nifty is now down 200 points. It's now inching closer to the 21,500 mark. We'll monitor that level, and of course, the markets have been facing stiff resistance at 21,700, 21,800 so far. Now the resistance level is also lower in trade, and the supports are shifting lower as well. We're now looking at 21,500 to a percent down in trade. We've broken that level as well. On the downside, the Nifty Bank 735 points lower, 1.5% down tick coming in. All the sectors, barring just few green ticks coming in on the realty, are down into the red. PSU banks, FMCG metals, the biggest laggards in trade today. And of course, I think barring about 7-8 stocks that are into the green as far as the Nifty is concerned, rest of the stocks have all turned into the red as well. Soni, what would you recommend? How would you see the markets trade in tomorrow's trading session? Nifty Bank, what would be the strategy you'd advise?
I think out of both the indices, Bank Nifty is the one that is actually closing below its support of 47,500. So I think Bank Nifty is a key over here. It can either test 46,800 or see a good bounce back tomorrow. Nifty is just right on the verge of its support. So 21,500 is the support, although it has made a low of 41,492, but it's almost closing at that support level. So there could be a bounce back tomorrow. It's just best to avoid any sort of indices led specific strategy as of now. And Bank Nifty on a positional basis, if it's not able to take out 48,000 in this coming week, then there could be some more profit booking seen in Bank Nifty, which can take it up to 46,800 levels. I think that's one that can be watched out. It is better to go be slightly on the shorter side for Bank Nifty as long as the resistances are not taken out. For Nifty, it's right on the cusp of its support. So I think it's better to just avoid Nifty for now, and we'll take a view on how it pans out tomorrow.
Okay, so actually let me point out some interesting stocks. I'm looking at these stocks where despite the selling pressure, the stocks have recovered sharply from day's low. It essentially means that they are high beta plays, and you just might see a very sharp bounce tomorrow. So the first one is news driven. Chambal Fertilizers, they are going to announce a buyback. The day's low has been 368 and the counter is at 378. This is one of the few counters in the FNO space which is in the green, 1.5% higher. We'll also look at TVS Motors. This is also an interesting thread that one must observe. Okay, now this is really, really interesting. We have a low of 1984 today, and the counter is at 2037. TVS Motors has actually come up 3.2% from its day's low, and this is accompanied by actually a drop in OI, which basically means short covering. To you, Soni, a comment on TVS Motors, any view that you would hold for tomorrow?
I think it be a good positional trade. It may not be completely just for tomorrow, but a good positional trade. 2000 is a good support. So as long as 2000 is holding, it will try to take out 2060, then again head towards 2100. So it's a good positional play and accumulate on any small declines that can be seen as up to 2000 levels. So I think from there it can bounce back, see 2060 and 2100 also. And also with the positive RSI divergence today, it has crossed the 10 EMA and it also closing above it. Good volumes today and yesterday, today especially. So it's a good trade, good stock to hold for positional 1 week.
Okay. And Sakshi, in your cement space, what can I say? JK Cement, you've been on this case for a while. Even JK Cement is one of those counters up 2%, accompanied by a 22% rise in open interest. ये हमने पहले क्यों नहीं देखा? And it's also jumped 2.5% from J's low. Okay, I think Sony, we have a good counter to look at thanks to Sakshi. Okay, JK Cement actually record high, ladies and gentlemen, 4004. Your view, Sony, on this one? Would you chase momentum?
I think this stock is, it has added good long built-up positions today, definitely. And also on charts, we can see that it has given the breakout above 3970 levels. On closing basis, also it is above 3970. It has tested 4040 today, but then the overall view for this stock is coming quite positive. There's a weekly breakout also for the last 4 weeks continuous breakout. So definitely the stock can head towards 4200 as long as 3970 is holding. So that's a very good reasonable risk reward ratio, quite favorable, and you can see quite high targets on a weekly basis up to 4200.
Okay, 4200 as the targets for JK Cement coming in. Let's look at, we are just about 5 minutes to go for the markets to shut shop for today's trading session and end this weaker trading session, of course, and then look at some better opportunities tomorrow. It's the broader markets and some names. I'll take your view on BEML, Sony. Long-term view on this one, not a trading view. 2.3% higher, BEML. We've been looking at Shell's favorite sector, the defense sector, all through last few days and even today also in the morning. Stocks like Cochin Shipyard, Mazagon Dock and BEML now picking up pace. How would you look at BEML for a long term?
So looking at long-term charts, monthly and yearly, as that I can see, there is good breakout and it is continuing above the 2800 2800 2900 odd resistance. So I think as long as there's some small dip around 3100 to 3050 range, that can be a good accumulation zone, and 2900 can be held on a positional basis. The stock has technically does look like it can test 3300 to 3400 range again. So I think that dip is quite crucial. If you get the dip, it's better to enter on dips just to avoid on the current CMP and wait for the dip to come.
Okay, wait for the dip to come at this point in time. All right. Before we wind down the edition, Shell, do you have anything else that you'd like to point out?
Well, Sakshi, now this is really difficult. कुछ भी नहीं चल रहा screen पे, but I will still make an effort. Okay, I think let's look at Century Textiles. This is one of those rare stocks that we don't discuss much, although it says the word textiles in it, but this is actually a real estate play, and it's moving fairly sharply over the last 3 odd trading sessions. A very sharp spurt in volume, and of course a record high 1510 Sakshi. if you keep on pushing me, there is nothing to really talk about today. But Soni, to you, what are the charts saying? Very, very sharp spurt in volume. Today about 13, 14 lakh shares traded, and last 2 days 20 lakhs each. Breakout here.
Yes, absolutely. I think quite a strong breakout with 3 days of continuous strong volumes as well. And on the downside, 1370 to 1420 is a good support band, you can say. Immediately, if there's any small dip, if at all, towards 1480, 1450 range, it'll be wise to enter in that dip. However, the stock is quite, it's technically it is looking quite strong to test 1540, 1550 levels also on immediate basis. If the dip is there, it's good enough, or else one can just can hold till 1540 and book your targets around 1540.
Okay. All right, a minute to go then. Very, very difficult trading session with no, exciting stocks to talk about anymore. We're just drawing to a close, and we'll hope that tomorrow is a better trading session when we can find enough and more stocks to talk about and the kind of momentum that it is generating. 200 points lower, ladies and gentlemen, for the Nifty. It's tested that 21,500 mark on the downside. Right now, trading above it, managing about 0.9% of a fall. The Nifty Bank, clear culprit, 1.4% downtick coming in for this one, and it's now the realty sector also that's slipping into the red. So you have all the sectors down into the red. I think barring just very few green ticks and the media stocks, rest of the sectors are down. It's a down kind of a day for the markets. The Nifty down by about 0.9%. Most of the stocks down in trade, with the heavyweight counters from the banking space, consumption space, FMCG, stocks like UPL, SBI Life, State Bank of India, Tech Mahindra, Divis Lab, M&M, ITC, Britannia, LTI, Mindtree, all of them down in trade. And of course, the heavyweight counters like Reliance Industries, HDFC, ICICI are not really doing anything much. It's Adani Ports that's ticking higher in an otherwise weaker sentiment. ONGC, Sun Pharma, NTPC, Hero Moto, HCL Technologies, the top 5 movers on the Nifty today. As far as the broader markets are also concerned, down in trade, 0.5% of a fall for the Nifty Small Cap 100 Index and about a percent fall for the mid cap. So the mid caps have seen a bigger blow between the two in today's trade. F&O gainers, GMR, airports, infra clearly buzzing very, very sharply in an otherwise weaker sentiment kind of a day. Shriram Transport Finance up by about 3% in F&O, TVS Motors 2.5% higher, Manappuram Finance 3% higher, JK Cement up by 2.15%, and HPCL also buzzing in trade. All right, we will wrap up this session right here. Then many thanks Soni and many thanks Shell for being with us on this special edition. We will get back to the markets tomorrow morning and see whether there is a fresh wave of buying that happens from these lower levels as well. We'll keep you posted with everything that's buzzing on these streets, so don't go anywhere. Stay with us on Business Today TV as news and information follows even from here on as well on your screens.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
4-power push of India's very own holiday paradise, the untouched and unspoiled Lakshadweep.
लक्षद्वीप की